Hi, I'm Martin Frick, CEO at Moneythor, and welcome to the Deep Banking Podcast. So welcome to the next episode of my podcast series about deep banking. Tonight I have a guest that is a little bit more into technology. So welcome to the podcast, the Chief Product Officer of Moneythor, Vivek Seetharaman.
Thank you, Martin. It's a pleasure to be here. It's the first time that I'm doing a podcast session, so it's always exciting. A little bit about myself. Graduated with an engineering degree in computer science. Spent a few years building software for other companies from a service point of view. And then that was a good foray into learning and putting to use what you had theoretical knowledge on. But always I've been a big technology enthusiast and wanted to see how technology can shape things in people's lives. And that's where I met the founding team of Moneythor, who at that point had 60 plus years of collective experience building softwares. Moneythor was their second entrepreneurial venture, and I joined the team. First few years was rapidly innovating, building product offerings and bringing it to clients. But as any startup would have it, a successful startup would have it. As you had more clients, we had to wear all multiple hats, all of us. That took me all the way from pre-sales to POCs to client implementation projects and customer success. And yeah, from that point onwards, that's also mirrored the company's growth. And right now I'm heading the product division, and we are in that transformational journey of becoming an operationally resilient and scalable company. And I believe we have done a lot of changes towards that end.
Okay.
Yeah.
So this sounds like a 15 years journey to me. And you've always been in banking. So how did you see your clients evolve over these last 15 years? What has changed in banking from your perspective over the last 15 years?
Over the last 15 years, and yes, it's really now that I look back at it, it seems like a long time. We are talking about 2010s, 2015s, when internet banking was still the main touch point in the digital front. And then your primary relationship with your bank was through a bunch of cards, a few dollar bills sitting in your wallet. You're basically, as a customer, your interaction was in the back pocket, as I call it. And then slowly through the time, it evolved to your front pocket with your smartphone adoption and internet penetration. You started having digital engagement truly with your smartphones. The other set of problems that this transformation opened up for banks is that they were then competing in real estate space in your smartphone, and customers were starting to interact with products like Netflix, Amazon, e-commerce, super apps, and they were starting to expect a lot more from banks in terms of what digital banking experience means. So that's been the other shift. One is focusing on digital banking itself, and second, the customer centricity and the importance of having customer experience at the forefront of it.
Do you think this is just a myth, or is this really happening? I hear a lot about digital engagement, customer centricity, but my experiences with banks are super transactional.
Yep.
I just recently had an issue with one of my banks. It's just impossible to reach anyone to help you. So I'm not sure whether banks really engage or whether they still only transact. What is your view on this?
To some extent, banks are still very transactional, but that's something that they are rapidly trying to change, and they are forced to change. The problem of being just transactional is you have, with the massive adoption of technology and the general global upward mobility in terms of economy. I remember you speaking in your previous podcast about the emerging affluent segment gaining more traction. What this means is that you've had every bit of external pressure operating in and competing in that same space as banks traditionally did. You have peer-to-peer lending platforms now. You have super apps that's competing for your share of wallet. You have the fintech companies that are operating on your global payment rails to do international fund transfers. So the problem of just being transactional is that you are going to be losing to the bigger game then. So what is the game? The goalposts have shifted essentially. So you're no longer just limited to providing these transactional capabilities on a back side, but you are expected to face these customer engagement experiences. And where I see banks are still struggling is in that mindset. So if they are still stuck in a very product siloed mindset and try to offer this proactive customer engagement, There are going to be some real serious challenges that they face.
Yeah. So a term that was coming up more and more in regards to engagement was deep banking.
Yeah.
So essentially meaning shifting away from products and transactions to deeper relationships. Now, this is enabled a lot by technology because you were alluding to the fact yourselves that a lot of the interaction is happening digitally nowadays. So in your 15 years or even now, what are the major technology changes that happened that enable banks better to really engage with their clients?
I would structure this is one of the first things with these pressure points that banks experienced is they started looking at what differentiators that they can work with. And one of the things that they immediately realized, and I'm still talking about the recent past from 3 to 5 years ago, is that they are sitting on data. Then the strategy was, how can we better utilize that data? So one of the truly transformative, technologies and use cases that the banks were focusing on was turning that data into engagement experiences. So they realized that you need to build customer engagement and build deeper relationships. And the starting point was looking at data and trying to, source it from multiple source systems, from backends, augmenting it with additional tools and intelligence, and then turning them into customer engagement experiences. So that's one critical piece that the banks have worked on in the past few years. The next is also tools and ecosystem that the banks have built around this raw transactional data that they sit on, in terms of having agile decision-making capabilities, in terms of having configurable business cases that are, that can be launched at will and then collect customer feedback and then tuned. So this whole concept of, redefining a bank as a technology-first company, that's utilizing technology not just for the sake of it, but also coming with it the benefits of agility and operational resilience that they want to build towards with. That's kind of been what has been going on in the past few years.
Okay, so you were mentioning data a few times, and for sure, nowadays we're not in lack of data, but to turn data into information can be a challenge, and we're all used to be happy about Google search where we can search stuff, but nowadays everyone talks about AI. Now you have predictive AI, generative AI, agentic AI, conversational AI, very confusing for a guy like me. So maybe you can explain to us a little bit how AI evolved over the last 4 or 5 years.
Yep. And it's interesting to see these parallels develop as well. And that's something that's personal, and I try to see those patterns. I can't help it being an engineer, is to say that initially you had data. So you were working with just data and tools that were able to work on this data and turn some intelligence out of it. I know I'm conscious of the fact that we are in a rapidly evolving space with generative AI and the advancements that the industry has put forward. But sometimes it's also good to take a step back and realize the good old machine learning models, the complex algorithms that were in place, those were the humble beginnings of the AI journey itself. So those initial usage of AI in terms of understanding data and being able to create, we'll talk a bit more about segment of one when we get to the end state. But what those initial tools were able to do was just create segments of many. So they could understand data, but they really do not understand customer preferences, what their behavioral patterns are. We are still far away from that timeline. But they were at least able to create customer segments of, oh, this is a spender, oh, this is a saver. This customer is particularly interested in savings, or they are interested in restaurant spends. So that's what unlocking the initial wave of AI did, was unlocking segments of many from the data points.
Just to position that for the listener, would you call that stage of AI machine learning, or what would you call it, or this early stage of AI?
So those early stages of AI, yes, the primary way you were able to use it was through machine learning models. So you give it data, it's specifically crafted to understand patterns and unearth these kind of segments of many from it. But that was the limited scope of it. So it was, yes, using machine learning, but the outcome of it was to create customer segments.
So still very rule-based.
Correct.
Very rule-based, not free learning kind of AI patterns. Okay.
Yep.
And then the next evolution was?
So the next evolution immediately from there took a lot of time, but now we are in that second stage. where you're going to have generative capability. So we are talking about AI being able to do thinking, reasoning, and then start engaging directly with customers. So when these kind of capabilities have been rolled out now, what it means is that you can go really beyond doing segment of many and using AI to do segment of one. What I mean by segment of one is that you're combining the data and the signals that those data points give you with customer preferences, with reasoning to say why is someone doing this, or behavioral science to really understand where the customer is in terms of their financial life cycle. And then utilizing all of this to create a truly personalized engagement experience for them. Yeah.
So a lot of things happened in this, I would call it AI foundation, for the lack of a better term, large language models, etc.
Yeah.
But then you need to find concrete applications on top of these models, because otherwise they kind of, with little value, to write a children's storybook for my small children is great, but of little practical use for economies or banks.
Yeah.
So how do you see now the application of these AI technologies evolving? Do you have good examples where AI is already used in practice to help with something?
One of the really low-hanging fruits and the real benefit that the banks can see in very short term is using AI to improve their operational efficiency. You're talking about your KYCs, you're talking about your onboarding processes, risk assessment. They are still back-end operations that are really not customer-focused or they don't have any touch point with the customer. They are back-end operations that can really be optimized and streamlined for a bank using AI. The benefit of this is that you immediately start realizing value. And it also gives you a good set of tools to start interacting with AI and then building confidence internally within your teams to start using AI for larger projects and larger missions. The next immediate wave that we see happening, and we are also very actively participating in it, in crafting that particular feature sets, is assisting your touch points with your customers, but still backed by a human. So we are talking about scenarios where your relationship managers or your bank staff are provided with AI tools, and that's going to help them better understand their customer finances, the ones that they are talking to, and then having conversation starters in terms of what's the next best course of action that you would want to bring up to a customer when you're sitting as a RM behind your RM application. So those kind of use cases where you're slowly introducing it to the customer, but through a proxied bank staff who's still human touch and validating things. The process of this is to, again, get comfortable, is to get more, confident that the AI tools and the frameworks that you have put in place are delivering value. But real benefit of it is going to come when it's opened up to end users.
Do you think this will happen soon? I'm a skeptic about that, because I'm in this industry even longer than you, as you can tell from my gray hair. And I think regulators will be very scared about that, because you mentioned independent thinking, learning before, but regulators hate situations where they cannot point to someone when things go wrong. And also the purpose of compliance is somehow to make sure you sell the right products recommendations to the right target audience. So how do you handle this if you then have your free thinking AI? Can you put guardrails in place, or how would you technically address that?
Yeah, so definitely that's something that regulators will be very concerned about. And it's not just in the banking space. We see even globally, there are, government discussions and panels happening on should we regulate AI, what sort of guardrails we need to put to this new technology. And it will trickle down to banking sector as well. And it means that first, you cannot run away from it. The technology is here. It's been unleashed onto this world. It's going to be as transformative as the internet itself. It's going to be as transformative as all those waves of technological advancements we have seen. This is the next wave. So what is needed is not to first be afraid of it, but to be really pragmatic around putting up robust frameworks and policies and governance structures. And you do have compliance and regulatory requirements that need to be rethought in terms of what AI should be allowed to do and where you put those guardrails. And yes, as with any technology, you do have the options, even with AI, to really put guardrails and monitoring systems in place so that it behaves the way you want it to and doesn't really run havoc. So the risk is real, but there's really no need to be scared about it because we have seen multiple waves of similar technological advancements.
I think you need to thread a thin line there, because on one hand, you don't want it to become too rule-based again, because in the end, compliance regulations are rules. You still need to allow this kind of free-thinking space to make it relevant, And I think it's a space interesting to watch, Okay, so we talk now a lot about AI is revolutionizing the use of technology. So how is Moneythor applying AI?
A little bit about Moneythor. What we do and what our core value proposition is to help banks personalize experiences for customers in their digital journeys and to do, gamified customer 360 experiences. In that regard, AI is a critical tool that we use. It's a technology that we use that helps us in this journey. And, broadly speaking, it is falling into 4 different aspects of it. One is the predictive AI that's looking at data and turning them into meaningful, segments and customer insights and predictions. Then we have that wave of generative AI that's looking at the operational efficiency aspects of it. Then we have the conversational AI. That's where truly we are starting to have customer interactions. And then the agentic AI, which is whole automation, supercharged through AI.
Okay, so you have kind of AI that you're using to better the experience of the user of the product. You were mentioning agentic AI, conversational AI, others. Then apparently we also have AI using for operational efficiency. You mentioned sidekicks.
Yep.
Sidekick sounds like a little helper to me. Maybe you want to explain what a sidekick is doing so we understand?
So you probably have experienced it in your day-to-day usage as well. So just for a broader context of understanding of what Moneythor does, we are a Moneythor application that gives bank users the flexibility to configure business rules. And we are still talking about those rule-based things now because we are not yet in the agentic world. And what it means is that it's going to be through a collaboration of business users working with their technical team, creating unique customer experiences. But this friction means that, when a business requirement needs to be made live for a customer, it has a long product cycle. You need to work with your tech team, define the business requirements, they translate it into a configuration that's run on the Moneythor platform, and then it goes through the testing cycles. So yes, we did cut short with our initial wave. What used to take 6 months, we brought it down to 6 weeks for banks, but 6 weeks is still too long for anyone now in this day and age. So these sidekicks are helping to bridge that gap even further to say you can understand an AI, a model can understand a business user requirements. It can work with Moneythor platform and turn them into technical assets that Moneythor understands as a rule configuration and quickly enable these use cases.
So it's kind of replacing the coding.
Yeah.
Is that what you're saying?
Correct.
Okay.
The configuration of the platform doesn't need any tech dependency.
So there is a lot of hype about AI out there. So how can you distinguish now between the hype and real things?
Good question, because that's talking to our core, company DNA as an engineering-focused product. It's one of the reasons why we didn't really want to brand ourselves AI is we didn't want to get caught in this hype versus real question. So everything that we have done so far is to build a robust product offering and things that deliver value before we start, calling ourselves an AI company. Because it is true that a lot of noise out there is AI first, AI everything, but it's going to be difficult to differentiate yourself unless you have that backing in terms of product offering. So that's what we've been focused on so far, quietly building all these capabilities before we were able to, position Moneythor truly as a forerunner in AI space.
Okay, that's interesting. Now, to wrap this up a little bit, we were talking about how banks evolve their engagement with clients. We were talking about these different phases of AI development, from machine learning to the holy grail of agentic AI. But then we have banks, which are conservative animals. So I assume you as the chief product officer are a lot involved in pitching to banks, talking to clients. So when you talk to these banks, how receptive are they really for this technology? Is it just still a little bit experimental, or are they really applying it in their everyday business, or how would you judge that?
I think there is a lot of interest. And I think there's a lot of interest because it's coming top down. So you have the senior management and the board deciding that you need to find your unique secret sauce of using AI to better position the bank for the future, but it's still not very well defined. So what I see on the ground is different from what is being positioned as the strategy for the banks themselves. And that's causing a bit of confusion. So does it mean that management wants your team to build AI tools yourself? Does it mean that they want you to put robust frameworks in place? As with any evolving new technology, it's a bit all over the place. So there is healthy skepticism. There is, excitement that we are going to use AI to unlock everything possible, treating it as a silver bullet. The technology teams are fascinated with it. And now with even more focus being on digital engagement and technology, they are getting a bit more, shift of power to say, okay, we are going to build everything in-house. So it's a bit all over the place. That's kind of my take on it.
Where do you think we sit on this innovation curve? I don't know who introduced that, invented that, but there is this famous innovation curve where you have excitement first, and you go through the valley of tears or frustration, then you lift yourself up again to a normal level. So are we now in the valley of tears, or are we still in the excitement stage? Where do you see?
We are still in the excitement stage.
Yeah.
We are still in the euphoria stage where, everybody is trying best to bring this all together. But again, the problem seems to be the fact that people tend to operate in silos. You have the different products, different business organizations within a bank that are trying to use AI for benefiting them. There are technology arms of the bank that are looking at a bit more holistically, but trying to build everything themselves because it's a new toy out there. So it's still very much early in the excitement phase. Not done right. We will have to go through a painful, long valley of tears.
Actually, where do you sit on this build versus buy conversation? I recently had a LinkedIn post talking about that, got very interesting reactions to it. So what do you think should banks buy and what should banks build in your view?
I did give it some deep thought recently because it's something that I've been confronted with when we talk to clients as well. The answer for me is banks should look at their value chain, starting from their core banking systems all the way to the data that they produce, the tools that they have put in place, all the way to their digital channels and the customer engagement. And then they need to apply what I would like to call economies of scale to components that really deliver economies of scale to the bank. The way I'll illustrate it is that think of it, would a bank build a core banking system? No, because they are still going to serve a few million customers, and it doesn't make sense as economies of scale for them to build a core banking system. You're better off leaving it to a software vendor. Would a bank build their own cloud service platform? No, they would use AWS or Azure or GCP. So even for AI, I think that principle should apply. Are you better off building tools that build basic connectivity and orchestration capabilities to AI? Are you then truly a technology organization that's going to focus on scalability, enterprise level security and all that? Or are you going to be pressured with operational business decisions that need to be taken? So for me, it's always going to be a healthy balance between build versus buy, deciding what your unique secret sauce and economies of scale are, and defining them, being clear. There's no one right answer. It might vary from organization to organization. So once you have decided that you want to focus on certain aspects of that value chain, then leave the rest to the industry and the players that are there in it.
So thank you very much. Very interesting talking to you, Vivek. So ladies and gentlemen, get your handkerchiefs ready. We're approaching the Valley of Tears soon. Thank you very much.
Thank you, Martin.